Good evening and welcome to my end of the week recap video here for the SPY. As I scroll back here to Monday, you can see I've taken quite a few scalps. Get to all those momentarily. Monday, we had a nice little breakdown here. It took 294 puts at 30, reduced at 35. The rest stopped me out at break even at 30. Looked like we were setting up a base at a prior level of support right in this region here. So I went ahead, I started building a position in these 28 June 294 calls here at 55. Very nice entry. Tuesday there was no follow through. We actually moved lower, broke that support and sold off. Had a nice potential bottom here, so I added in here at 106. Once it started to work, I added again at 108, and then it failed. I did not close out. My initial plan was to trade off of the 8 EMA, so it was so close to right there. At this point right here, the 8 EMA, was flat and it was hovering right around 292.15. So I said if it comes down to there, I will add again, take my average down, and it should bounce. So added again as we tested it, had a nice buyer, put in this long lower wick, moved higher. Did not take any off up here. Of course, in hindsight, that would have been the area to take some off, at least reduce some risk. I just got greedy. I thought it was going to be a significant bounce based on this wick here, and it broke lower. Told guys in the trade crew room if it broke this low, I would get out. So ended up dumping that for about a 45% loss, a little bit larger than I would have liked to have taken, but it is what it is, and just had to move forward. Now on to Wednesday. Took another breakdown play. 291 puts here at 38, added as it was working at 43, and once it started to kind of stall out on the move down and a big buyer hit the tape, I dumped them there at 46. In hindsight, it's a great idea to go ahead and close those out because you can see from that low, it popped up about 85 cents, which would have wiped out the value of those puts. So started to chip away at that initial loss from the 294 calls. Later on, I took a play in 291 calls here, expiring same day at 58. The initial pop here, I immediately took the majority off at 66. The rest trailed me out here at 56. So a little bit of green there, just chipping away at that initial loss. Once I had this trend break here, I got 290 puts here at 74. Once it was working, added at 80. Took some off here at 89, took some more off at 90. Again, you can see a long lower wick here. Buyers were noticeable on the tape, and that was a cue to go ahead and take some more off. Held a little bit longer than I should have on the remainder of the position here and took those off at 78. Overall, it's still a very green trade. It's just, again, chipping away at that initial loss. Later in the day, had a nice little sell set up, started to form an H, so I took these 290 puts here at 80. Worked out greatly in my favor. However, at this point, I signed out and had some other stuff to go do. And Thursday, we gapped up, which was the last thing that I expected to happen. There's no follow through this week on any significant moves, at least not overnight. So that caught me on the wrong side, and I ended up closing those out at 47 off of the open. Let's see here. Later on in the day here, still in scalp mode. Was looking to take another breakdown play. This blue line here is the 8 EMA. Took these 291 puts here at 70. Once it started to pop up, I didn't want to get out of the position completely, just wanted to reduce some risk, so I took some off at 70. Once it started to work in my favor, I re-added them back in at 74, reduced at the prior low of the day here at 80, and the rest trailed me out at 75. So that one still ended up being a very green trade, and again, chipping away at the losses that I had already mounted for the week on SPY. Pretty much closed the week flat as far as P&L for SPY. Little red, but it really took a lot of effort and a lot of mental stress to scalp around these moves and at least get some of those gains back. Later in the day, had this huge wick form, had an inside bar that was setting up, looked like it was going to be a momentum move down. So I took the 291 puts here at 87 with the thought that we were at least going to come down and fill the gap down here to this candle. Buyer hit the tape, had a double inside bar. I said, you know what, there's no follow through. Let me go ahead and get out for what's there. Took a nickel gain on it. And that was it for that play. End of the day here on Thursday. Looked like we were holding support at the 8 EMA, so figure why not. We're in a chop environment, so if I buy here, maybe we get up to around 292.06 or so. Started here at 66, had a nice little move down here, added at 57. And once it broke that low, I just dumped them all at 57 for a small loss. wasn't scared of taking another trade, so once it put in this big green bar here, I took another trade here in at 62, out for another nickel here once a seller hit the tape. So it was a week of a lot of scalping here in SPY, a lot of misdirection, just chop back and forth, and like I said, ended up slightly red on the week, but it could have been a lot worse. Anyways, on Friday, I did add a new spread here for Friday. Anyways, I believe it was a 295, 297 call spread in another account with the thought that G20 is going to be very positive. We've already got some good news out of G20, some nice comments from Trump and Xi, and we'll see what happens on Monday. In my opinion, we're probably going to gap up a little bit, but we'll see what happens with that. On to futures. Get some of these lines off here. They're kind of just in the way. Nice buy setup here, held the 8 EMA, and I said last week in a trade crew room, if we broke over, I think it was 29.20 and held, something to that effect, that we're going to definitely see 29.70 by middle of this week. So looks like that's going to play out, even though I was trading both sides of the tape. Overall price action is still bullish. We have the price above 8, above the 21, above the 50 SMA, and above the 200 SMA algorithmically and technically. This is a very bullish setup despite the macro events and the negative news that's going around right now. So right now, futures are positive, bullish, and SPY is bullish. A lot of sectors are bullish, which completely erased my video from a couple weeks ago where it looked like everything was going to come down. So anyways, the monthly bar here for futures has put in an outside bar, bullish engulfing bar, however you want to look at it. There's going to be some analysts that argue this is creating a broadening formation. It's going to come down to 2700, 2650. It's possible. I'm not going to say it's impossible, but this is a very bullish bar and has reclaimed all of the month of May sell-off from what was a prior peak. Usually when that happens, this was a technical level that was being shorted against. If that level's taken out, which it is now, it's probably going to turn into support once we break higher. And I have a measured move that takes E-mini futures at least up to about 30.50 in the very, very near future. Maybe it happens this week because of negotiations restarting with China. So back over to SPY and what I'm looking for going into this week. As I mentioned, I'm in a couple of call spreads based on what I thought was going to happen at G20, and I will continue to hold those. Target near term for SPY is going to be around 297.20-ish area. We'll see if it can make it up there. If for some reason it pops and it pulls back into these moving averages, these are the calls that I'm looking at for swinging at those specified levels, as well as the 200 SMA. So for now, overall, the market is bullish in my opinion, especially algorithmically and technically. You're above every key momentum moving average and long-term moving average. So it's hard to say it's bearish at the moment, even though we did have this strong sell-off from June 20th. Now on to transports, which I like to hit on every now and then. Very strong 3 advancing soldiers pattern, has now broken above and closed above the 50 SMA, and at the very least I think we come up and test this area just above 195 in the very near future. If there is a deal with China and goods start to flow back in and out easily, this is going to be a huge boost for transports. Reason being, you have to move products, you have to move materials, all that good stuff, and that in and of itself means transports are going to have more business and their bottom lines are going to grow and get back to a quote unquote normal. So we'll see if that does play out, but right now transports, although not at all-time highs, obviously transports are confirming the move higher in the overall market. So we'll see what happens with that. May take some trades in some China names this week because that news out of G20 is going to be positive for those so far. So we'll see what happens going forward. That's my trade plan and my thoughts for this week. If you have any questions or comments, please feel free to leave them down below. Hope everybody has a good weekend and good luck on Monday.